Okay, good morning everyone. Good morning sir. Thank you for responding. Let's start. So, yesterday's lecture we had almost completed this chapter of equity valuation. In that, we'll today complete. After this, only one sum is left, and then we will start with new chapter, that is corporate valuation. Now, in this chapter, or in this question, as I might say, we have almost completed this. Only the last part is left. So here I will first of all calculate the present values except the last one. So this, can I say, is 20 only. So then this will be 1.2 into 0.84. This is 1.01. Then 1.44 into 0.706. This is 1.02. Then 1.73 into 0.593. This is 1.03. Then 2.08 into 0.499. This is 1.04. Then 2.5 into 0.419. This is 1.05. Till here everything is okay. But then the last one, no, I will put 2 stars. Okay, I'll put 2 stars, and then I will say first of all P5 is equal to D6 upon KE minus G. 2.5 plus 10%, the whole upon, the only thing that changes is now the discounting rate is not 18, no, we are doing a trial at 19%. We are doing a trial at 19%. Okay, so 2.5 plus 10% divided by 9%, correct, 30.56. 30.56. 30.56 is P5. Can I say present value will be 30.56 into 0.49? Everyone clear, no? 30.56 into 0.49 and no, sorry, this is not 49, this is 419. Huh? Sorry, this is 419. This is 419. So 30.56 into 0.419, it is 12.8. So this number here is 12.8. And then we will do minus 20 plus 1.01 plus 1.02 plus 1.03 plus 1.04 plus 1.05 plus 12.8, negative 2.05, negative 2.05. So therefore KE bracket IRR lies between 18% and 19%. KE is equal to 18% plus X. At 18% there is a positive NPV of 0.28. At 19% negative NPV of 2.05. At KE the NPV should be 0. So R, when I increase by 1%, NPV drops from 0.28 to negative 2.05. That is negative, that is 2.33 it drops. but I want it to drop from 0.28 to 0. This is 0.28 into 1 divided by 2.33, 0.12. Therefore, KE is equal to 18% plus 0.12%, that is 18.12%. All done? Now, such a nice question. Why did I put it in miscellaneous? I put it in miscellaneous because they are wrong in calling this answer as required return. I hope you are understanding. It is not required return. It is the actual return. Everyone clear now? It is IRR. That is a slight error in the framing, because you know now they call everything as KE only. That is a problem. Everything is KE only. So, but Gordon's KE we are calculating in the first part. That was also IRR only. In second part we literally did IRR. But it's okay. So I guess all done. So now the only thing left, can I see, is question 13. Okay. Take your time and start reading this question. Already? Okay. Monopolo Limited has a paid up share capital of 2 crore represented by 4 lakh shares of rupees 50 each. 50 is the face value, 4 lakh number of equity shares, total ESC is 2 crore. Recent earnings was 75 lakh, of which 25 lakh was distributed as dividend. The current PE ratio of these shares is 8. Point number A. You have been appointed as financial consultant of the company and are required to calculate what is the current market price of the shares already in use. Look at the screen. Can I say current market price will be earnings divided by number of shares will give you EPS. EPS into PE, everybody clear, will give you MPS, what they are asking you. Am I making sense? EPS into PE. Let's write this down now. That much tension over. Write down question 13. Question 13. What are they asking you? Point number A. In that point number 1. MPS equal to EPS into PE. 75 lakh divided by 4 lakh into 8, 150 rupees is the MPS. All done? 150 rupees MPS. Okay. The company is planning a major investment that will cost 2 crore 2 lakh 50,000 and is expected to produce additional earnings over the foreseeable future at the rate 15% on the amount invested. Okay, so they are saying that we have got a new project for which we will require 2 crore 2 lakh 50,000. From that new project, no, we will generate 15% per annum for eternity. Everyone clear? Earnings after tax. It was everyone clear till here story? Now can I say this money has to be raised? 2 crore 2 lakh 50,000 has to be raised. So what they are saying? It was proposed by the CFO to raise this money by a rights issue. Everybody clear? To raise this money by a rights issue to the existing shareholders at a price 25% below the company's market price. So students, that means can I say the rights price, the issue price will be the 150 rupees is the current market price you have right now received in your notebooks. That 150 minus 25%. Everybody clear? 150 minus 25% is the answer to point number 2. They are asking you what is the price at which the rights issue will be made. Everybody clear now? 150 minus 25%. So write down point number 2. Rights issue price. All 3 letters, don't write only short forms, it will look very bad. Rights issue price. 1 letter at least, one will put full form. Rights issue price will be 150 minus 25%, 112.5. $112.5. Okay, next. So students, that means do you realize that we have to raise 2 crore 2 lakh 50,000 by issuing shares at 112.5. So they are asking you in point number 3, how many shares will you be able to issue, or should you issue 2 crore 2 lakh 50,000 divided by 112.5. Everybody clear? So write down point number 3. Number of rights shares to be issued will be 2 crore 2 lakh 50,000 divided by 112.5. 1 lakh 80,000, no? Okay, 1 lakh 80,000. 1 lakh 80,000. 1 lakh 80,000. All done? 1 lakh 80,000. Hey, can I say therefore the rights issue will be 1 lakh 80,000 is to 4 lakh. You understand what I am writing here? Means for every 4 lakh shares held, you will be receiving 1 lakh 80,000. Which means that is, we can boil this down to 9:20. Divided by what? 20,000 on both sides. 9:20. Which means if you have 20 shares, you get one right to buy 9 shares, like that. All done. We can also write like this. Or it's okay. It's okay. We could have written that if we have 20 shares, we get one right to buy 9 shares. You understood, na? But no need to write that. It's okay, na? Obvious. 9:20. For every 20 held, you will get 9 right shares. Okay. So now till here it was a rosy picture, La La Land, but now things will become like Annabelle. So okay, so all the best. I don't know how we will be able to understand the next point. It's okay. All the very best. Ready? Yeah? Don't write. Point number 4. They are asking you something. What is the price at which the shares of the entity should theoretically be quoted on the completion of the rights issue? Which means they are asking you theoretical X rights price. Do you remember this concept, X rights price? So in this, what is to be done? Na? Very simple. Theoretical X rights price. Listen. Theoretical X rights price will be, let's say a shareholder is having 20 shares. Currently the market price is 150. Additionally, he or she will get 9 shares for which the issue price is 112.5. This will be divided amongst 20 plus 9 shares. Wait, take your time, read carefully. Did you understand what I have done? Correct? Okay. So I will now do 20 into 150 m plus 9 into 112.5 m plus MRC divided by 29, and I get 138.36. Correct? 138.36. Or if you remember, we can do on total also. Remember this total, how we used to do? Total means you can also do like this: 4 lakh into 150 plus 1,80,000 into 112.5, the whole upon 4 lakh plus 1,80,000. Are you able to understand this? This also will give you 138.36. Done. Can I go ahead? All right. Next. Assuming no incidental costs and that market accepts the entity's forecast. Okay. Now, sir, it was so simple. Why you are panicking so much? No, I'm not. I didn't even tell you whether that answer was right or wrong. Just wait. Ready? Okay. It has been that provided the required amount of money is raised and the market is made aware of the earning power of the new investment, the financial position of existing shareholders should be the same whether or not they decide to subscribe for the rights they are offered. You are required to illustrate there will be no change in existing shareholders' wealth. Okay. So what I will do is, I will say point number B. Point number B. Ready? Let's say an investor holds 1,000 shares. Everyone clear? Let's say an investor holds 1,000 shares. Wealth of shareholder. Wealth of shareholder before the rights issue. particulars, calculation amount, value of existing shares. Can I say 1000 shares he has? Each share is having a market price of 150. So can I say the wealth that he is having is 15,000? Everyone clear till here? Now point number 2. After the rights issue. Now in after the rights issue, okay, it is 1,50,000. Okay. After the rights issue, assuming he or she exercises the rights. Understood story? Let's say that they exercise the rights. If they exercise the rights, what will be their value, their wealth? Their wealth will be, first of all, value of existing shares. Now existing shares value, can I say, would have dropped from 150 to, can I say, 112.5. Remember this, it has dropped to 112.5. So it has now become 1,12,500. Additionally, there is a value of the right shares. Right shares. Now the question arises, how many shares will this person get to buy? How many shares will this person get to buy? Can I say it will be 1000 divided by 20 into 9. Are you all able to understand this? Take your time. For every 20 shares held, you will be entitled to buy 9 shares. So for 1000 shares, can I say you will be entitled to buy 1000 divided by 20 into 9. Now 450 shares will be able to buy. Everybody clear? Those 450 shares, can I say, also will be having a value of 112.5. So therefore this, can I say, comes to 50,625. Everyone clear? But for buying these shares, can I say we had to pay cash paid for right shares. Correct? These 450 shares didn't come to you for free. For students, I think one thing I have done wrong. I'm so sorry. The X rights price is not 112.5. X rights price is 138. 112.5 was the issue price. Everyone remembers? The value of the shares after the issue will not be 112.5. It will be 138.36. Everyone, are you able to understand? By mistake we took here. Last point only. So here, no, I'll just remove this. Okay. And what was the number? 138.36. Students all understood now what I am saying? 138.36. So here I'll write 138.36. Correct, will be the value of all the shares he is holding. So this is 1,38,360. This is 450 into 138.36. This is 62,262. Everybody clear? 62,262. For which the payment that was done was at the rate 112.5. Everybody clear? Payment was done at the rate 112.5. So that number comes to 50,625. So we purchased 450 shares at 112.5, which means we paid 50,625. But the value of those shares is not 50,625, it is 62,262. Everybody clear? Because the post X rights price is that much. So when I do this calculation, and I hope you realize that don't think that there is some kind of windfall gain that you are getting, because can I say the existing share price value drop in the process. Everyone clear? Your wealth will remain same only. It was all about that only. Your wealth will remain same. So when, okay, this is 1,49,997, 149,997 rounded off to 1,50,000. Is a rounding of difference. Everybody clear? Rounded off to 1,50,000. So earlier also your wealth was 150. Now also your wealth is 150. Everyone clear? Now we will consider the next case. What case is there? The next case is, what if he sells the rights? Everybody clear? What if he sells the rights? Does not exercise and sells. So here I will write, assuming he or she, okay, does not exercise the rights but does not do nothing. If you do nothing, you will go in loss. If you are not exercising, can I say you will have to sell the rights, correct? Okay, so assuming he or she does not exercise the rights and sells the rights. But for that, do you remember we will have to calculate the value of a right alone? Everyone clear now? We will have to calculate value of a right alone. So, do you realize value of a right alone? Anyone remembers the formula? It was theoretical X rights price minus the issue price. Everybody clear? X rights price minus issue price. X rights price is 150. X rights price is 138.36. Everyone clear now? And issue price was 112.5. So 138.36 minus 112.5 to 25.86, correct? At 25.86 rupees, you will be selling your rights. Everyone clear? Per right. So then I will now do the valuation. So check this out. Value of existing shares after rights issue will be 138.36 only. Everybody clear? First row will be intact. Second row, all this will not come. Okay, wait. First of all, this third row will not come. In the second row, we will say add sale of rights, and these 450 rights that you are going to get, this I will multiply by, I will sell, hello, everybody clear, I will sell at 25.86. I am not going to buy the shares or anything, into 25.86. So when you do the calculation, it is 450 into 25.86, and that comes to 11,637. 11,637. Can you please tell me how much is it total into? Same answer? 11,637 totals 149,997, rounded off to 150. Everyone clear? Done? Okay. Now institute does valuation of right like this only. Are you there? This is ICI, correct? I have a slight difference of opinion. I will tell you what I mean by that. Okay. For me, I will say, if I have 1000 shares, I get 1000 divided by 20. 1000 divided by 20, that is 50 rights to buy 50 into 9, which is 450 shares. This language you understood? I get 50 rights. Every right has 9 shares, no? So I get 50 rights to buy 450 shares, which means for me there are no 450 rights. You are understanding? There are only 50 rights. 450 are right shares. I hope you are understanding. 450 are right shares. But the number of rights are only 50, no? In every right, there are 9 shares. You have one right to buy 9 shares. Like that, you have got 50 rights to buy 450 shares. Everyone clear? So for me, the calculation will be like this. Value of a right alone will be, I'll tell you what I mean by that. 138.36 minus 112.5. This we also did here. 138.36 minus 112.5. But I will say this is value of a right. Listen carefully. Value of a right per right share. You are understanding? This is value of a right per right share. In one right, there are going to be 9 such shares. No, I hope you are understanding. In every right, there are going to be 9 such shares. So I will do 138.36 minus 112.5, and I'll multiply by 9, and I will say, hey, my one right now is worth 232.74. Correct? 232.74. And then where will things change? I will now do this. Okay, I will do this, duplicate, and I will write here Now, when I'm selling my rights, I am saying each right I am selling not for 25.86. Each right I am selling for 232.74. But I am not claiming that I have got 450 rights. I am claiming I have got only 50 rights. I hope you are able to understand. I have got only 50 rights. Nothing else changes. Everything remains same only. Everyone clear? No? Nothing is changing. Answer remains same. Just little internal calculation difference. Done? Now, let me tell you openly, this is not what ICAI does. ICAI does it like this only. Everyone clear? They do it like this. You are comfortable with this ICAI approach? Straight away 450 rights, game over. If you are comfortable, no, then I would request you all to go to valuation of rights module now once, please. Everybody go to your module where you did this rights and rights issue module. Go there. Are you there? Now, in that theory, can you see value of a right alone? One formula I have given. Value of a right alone. Now, in my, I remember you copied from my notes, but in my notes, no, value of a right alone, the formula is X rights price minus issue price, and then I have written in, put a bracket, and I think I have written into number of shares per right, something like that I have written. Which means, can I say that formula which you have written is as per this solution? You are understanding, no? Where I am saying value of a right, this part is also there, na, in your notes. I hope you are understanding. Hello? But can I say ICAI is not doing that? They are doing, answer will come same only eventually. Everyone clear? ICAI is doing only this much. So if you say that you are comfortable with ICAI, then that into, after the bracket what you have written, no, into number of shares, that you will have to cancel then. Everyone clear? Otherwise there will be a mismatch. You will have to cancel that. You will cancel it off. Understood now what I am saying? Okay. Now you will say, but sir, we did one full module, in that we have to change everything. No. I'll tell you why. Because in all the questions you did in that module, the rights issues were something like this: 1:2, 1:4. In every right, you had anyways one share only. You are understanding? First time we are tackling 9:20 kind of a thing. You are understanding what I am saying? So in the earlier questions, whether you follow ICAI's method or you follow my method, answer will come same only. Because even if you follow my method, you will do into one, no? Because in every one right, you have got right to buy only one share anyways. Everyone clear? So that never got disturbed. If it would have, I would have told you then only. Everyone clear? Like that. So you please cancel it off then, that part, extra part. Understood now exactly what I am asking you to cancel now? Okay. Okay. So this what you see is just an alternate, right? Avoid this if you are comfortable with this. Everyone clear? Now, this entire solution which I have done now is wrong. Okay? Now let's try understanding. Okay. So till now whatever I did, can I say is exactly in sync with what we have been doing? Correct now? Hello? What we have been doing, exactly that only I did. Nothing changed. I have kept uniformity, everything same. But there is something different in this question, which is why answer won't come same as what we have been doing in the earlier case. Everyone clear what I am trying to say? So I would want you to pay attention now, which is why I did not put this on purpose in the rights issue model. Even though this was rights issue, I did not put it there, because there all similar type of sums we put one shot. This is like little, atrangi, different. Okay, so we have to understand this now. So all the best. Let's start. There is a problem with point number 4. I told you na, fourth point, something is there. There is a problem with point number 4. I will take a lot of time to help you understand. Please pay attention. Everyone ready? Okay. Point number 4, if you want better clarity of why it is wrong, I would ask you to stick to this calculation of theoretical express. Forget that 9 and 20 individual. We'll do on the total only. Everyone clear? 4 lakh into 150 plus 1,80,000 into 112.5, the whole upon 4 lakh by plus 1 lakh 80. Everyone clear? Now I will be explaining something. You have to be very careful here. Okay, hold on. I'll put this much part in a bracket first. Okay. And I will put point number 1 here. I will put point number 1 here, and I will say existing market cap. Are you understanding this language? Existing market cap. Market cap, market capitalized value, number of shares into total, into market price per share will give you the total market value. Everybody clear? Not a big deal. Everyone following till here? Okay. Now, just think, I am a company having 4 lakh shares, 150 is the price. Total, can I say, I have my market value is 6 crores actually. Everyone clear? Existing market cap is 6 crores. Clear, che? Hello? Okay. Now, these 6 crores, I'll write here, that is 6 crores. Now, I am going for a new project, correct? I am going for a new project worth 2 crore 2 lakh 50,000. Everyone clear? 2 crore 2 lakh 50,000. This therefore will increase the market cap by 2 crore 2 lakh 50,000 because I am literally raising new shares also na, for it. 2 crore 2 lakh 50,000. So here I will write point number 2. Point number 2, increase. I'll put a bracket here. This is increase in market cap due to rights issue for new project. Story clear till here? Increase in market cap due to rights issue for new project. Done? Now, that number is 2 crore 2 lakh 50,000. Correct? 2 crore 2 lakh 50,000. Now, what is the problem? The problem is when this company raises from rights issue 2 crore 2 lakh 50,000, can I say it puts in a project? Everyone clear? 2 crore 2 lakh 50,000 it is putting in a project. Okay. Expected earnings from new project, can I say are 2 crore 2 lakh 50,000, and the question tells you that this project is expected to give 15% returns. Check. This project is expected to give 15% return. Did you check it somewhere? At the start only it is there, 15%, foreseeable future, 15%. So, 2 crore 2 lakh 50,000 divided by 15%, I am so sorry, 2 crore 2 lakh 50,000 into 15%, 30 lakh 37,500. 30 lakh 37,500 per annum, do you realize will be the expected earnings from this project? Everyone clear? Now, everyone remembers KE is equal to 1 by PE. This formula all knows. Right now, can I say the PE is 8 times and therefore 0.125. that is 12.5% will be K. Everyone clear? 12.5% will be K. Why am I calculating this? Hey, can I say value of new project? Value of new project will be present value of all future cash inflows from the project. Everyone clear? Whatever cash inflows the project will give in future, the present value of it will be the value of the project. Do you realize the future cash inflows the project will give you is 30 lakh, 37,500 per annum for eternity. I have to discount it at the rate 15%. Can I say I will straight away use Gordon's formula here? 30, 37, 500 divided by 12.5%. There is no minus G here because the growth rate is 0. Everybody clear? 30, 37, 500 is per annum na, for eternity. Everyone following? So when I do this, when I divide by 12.5%, can I say this comes to 2 crore 43 lakh. Everyone clear? 2 crore 43 lakh. What does this mean? This means we raised 2 crore 2 lakh 50,000, but the project that we got na is worth 2 crore 43 lakh. Is this possible? Yes, this is exactly what we say na, NPV is positive. Do you understand this 2 crore 2 lakh 50,000 that you raised and you are putting in the project? This is your inflow na, this is your present value of outflow. This is your initial investment and this is your present value of cash inflow. There is a positive NPV. Everyone clear, no? Sure? Okay. There is one more way of understanding this. It is like this. Value of new project will be earnings into PE. This formula will you understand? Earnings into PE will give you the valuation. Hello? Correct market price as we say. Earnings, can I say, are 30 lakh 37,500 every year from this particular project. PE, can I say, is 8 times. Do you understand? This particular project will increase your valuation by 2 crore 43 lakh. Everyone, are you all understanding? You should not get surprised. 12.5% was 1 by 8. I hope you are understanding. This 12.5, if it is 1.8, if this 1.8 I put there, end of the day it will become into 8 only. No, I hope you are getting it. It's the same thing. So this calculation is little final CH. This is a very simple inter CH. Everyone clear? Nothing. Just earnings into P will give market price. Game over. All done. So after this, what do you understand? We understand that, hey, we did one mistake here. The mistake we did was, we thought that NPV is 0. Think about what I am saying. We thought that NPV is 0. We thought that the company's valuation will increase by 2 crore 2 lakh 50,000 only, whereas in reality the company's valuation would have increased by 2 crore 43 lakh, considering the positive NPV in the project. Everyone, are you all there? Hello? Everyone clear, no? The valuation is present value of cash inflows. Cash inflows present value is 2 crore 43, not 2 crore 2 lakh 50,000. 2 crore 2 lakh 50,000 was the investment value. Everyone clear? Was the investment value. Like for example, think like this. You are an IPL team. Okay, and you have to buy Virat Kohli. Okay, now Virat Kohli now value is actually 100 crore for example. But Virat Kohli's wife now is having good relations with your family, and she tells you, you want to buy Virat Kohli, I'll talk to him, you can buy him for 60 crores only, 40% discount will give you. Can I say if you buy Virat Kohli, there is a 40 crore rupees NPV positive? Come on, think about what I'm saying. You are paying 60 crores, correct? You are paying 60 crores. Now tell me, after Virat Kohli comes to your team, the value of your team will increase by 60 crores or will it increase by 100 crores? 100, because the asset who is coming in is worth 100. No, you paid less. That's your expertise. Now you got in positive NPV. That's a different thing. But can I say 60 you invested plus 40 you got NPV, total asset coming in, your valuation will increase by 100 crores. Similarly, there is a Virat Kohli here worth 2 crore 43 lakh. You're understanding? But his wife told you, no, you buy him for 2 crore 2 lakh 50,000. I hope you're getting it. But when you pay 2 crore 2 lakh 50,000, but your company's value will increase by 2 crore 43, no. Everyone following till here? Okay. That is why capital budgeting used to say, go for positive NPV projects. It will increase the value and the wealth of the shareholders. The whole thing was that only. And why do we go for positive NPV? That's the whole logic. Market price will get affected positively. Done. So students, this I will write, that is 2 crore 43 lakh. 2 crore 43 lakh. I'll put a star here and I'll put a star here and I'll connect it here. Everyone clear? All done. How I got 2 crore 43. So tell me now, what is the new number now? So this is 6 crores plus 2 crore 43 lakh divided by 5 lakh 80,000. 145.34 is the new number. Hello? 145.34. Okay, 145.34. Ready everyone? Clear? 145.34. So then students, it will have a spiral effect on everything. Now please pay attention here. Do you realize that value of existing shares 1,50,000? That is not going to change when I am talking of the before rights issue. After rights issue, students, wherever we have put 138.36, all those places we will have to replace with 145.34. Everybody clear? 145.34. So here now I'll change. I'll write 145.34. Where else can you see 138.36? Here only. I'll write 145.34. Where else you are seeing? Yes, I'll write 145.34. Where else are you seeing? Here you can see here. I'll write here 145.34. Where else are you seeing? Here you are seeing. I'm writing here 145.34. Where else are you seeing? You are seeing here. I'll write 145.34. Everyone clear? And we will recalculate everything. Now students, answer and all will not come same. You're understanding? Because now what all that now was under some other assumption on the earlier module. Now earlier module, do you realize assumptions was NPV 0. Now first time we are doing NPV positive module. Okay, so what will change? So this is instead of 1,38,360, this will be 1,45,340. This will be 450 into 145.34. This will be 65,403. So 145,340 plus 65,403 minus 50,625. 1,60,118. 1,60,118. Everyone clear? 1,60,118. Then X rights price 145.34 minus 112.5, 32.84. This is 32.84. This is now 145,340. This is 32.84. 32.84. And this will be 450 into 32.84, 14,778. Can someone please tell me total? Same answer. One 145,340 plus 14,778. Same, no? 160,118. Now here I will say I have got 1000 shares and all. So the value of one right for me is 145.34. minus 112.5 into 9, and this is 295.56. 295.56. 295.56. So the 50 rights I will sell will be at 295.56. So 50 into 295.56, 50 into 295.56, 14,778, and 138,360 plus 14,778. Oh, sorry, one more mistake. Here also will change, no? This will become 145,340. So 145,340 plus 14,778, 160, 118. 160, 118. Anyways. So you all understood this question? Everyone done? But one conclusion we can give here is, you can see the wealth still remains same only. Huh? Hello? The wealth remains same, but the wealth remains same whether you exercise or you don't. But it will not remain same as before rights issue. Everybody clear? Before rights issue it was 150. After rights issue, whether you exercise or you don't exercise, can I say wealth will remain same. So what are they asking in the question? They are asking, it has, okay, now see the language that they have used, you will understand now. So read point number 4 again. What is the X rights price assuming that market accepts the forecast of earnings? They are basically trying to tell you that whatever PV of CI you will get, now you take it into consideration like that. Everyone clear? That is point number 4. Point number 5. Provided the required amount of money is raised, and again they are saying, see, market is made aware of the earning power of the new investment. Correct? So that is basically, instead of 2 crore 2,50,000, 2 crore 43 lakh. The financial position of existing shareholders should be same whether or not they decide to subscribe the rights. So I said, yeah, it is same now, whether you subscribe or not, it is 1,60,118. You are required to illustrate there will be no change in the existing shareholders' wealth. That we have already illustrated between whether if I subscribe or I don't. So what I will do is, since they are not asking me before versus after, I hope you are understanding, they are not asking me before versus after, I will not show this. No, I hope you are understanding. This is not required only. Before rights issue, what my wealth was is irrelevant. Everyone clear? The only relevant part is, therefore, after rights issue, if I subscribe, if I don't subscribe. Everyone clear? And I will say, therefore, existing shareholders' wealth remains same whether or not rights are subscribed. Everyone clear? Done, na? You sure understood na everything? Others, those legal requirements, I will not be knowing. SEBI and all that. Beyond my scope. Okay. Everyone done? Clear? Okay. So, from where is it pending? My God. Point number 4. So, I'll write theoretical X. Hold on. Yeah. This you will not write. Hello, you're getting it, na? This part. That is wrong, na? We will start from here only. Point number 4. Please start. That down part you don't want to write, na? Red. You can take screenshot if you want, in case you want. Everyone has reached 160, 118. Okay. And then last line you write this. All done? Those who want this screenshot can take in case you want. Ideally, okay, your choice. Done. And Sandeep, point number 4. Okay, now listen everyone. Good news, we have completed security evaluation. All understood? Chapter clear. So we have completed mutual funds, forex, security valuation, in that both bonds and equity. So today marks around 100 hours of teaching completed. You're understanding? So almost like 1/3 of FM done. Or I might say little more than 1/3, maybe like 2/5 done, like that. Alright. So now we are starting with new chapter, that is corporate and business valuation, or you can write, the name given by ICAI is business valuation, but in your textbooks it is corporate valuation. So whatever, you can write business/corporate valuation. We'll relax for 3-4 minutes and then we'll start, because I have to do some setting in the recording setup. Chapter is changing, no? 3-4 minutes, then we'll start.